So today, for example, you can immediately download an app of any broker. We have CFDs, we have future market, whatever. You can trade everything what you want. This is a privilege. But in the 90s, if you wanted to trade that, you needed to contact a direct broker, a real broker. And the brokers almost have been placed, of course, in the United States, in UK, but also in Switzerland. And you needed to make the businesses directly with the broker, and you had to have a security account of $500,000 or Swiss franc or US dollars or pound or euro. At that moment it was Deutsche Mark. And therefore, of course, nobody or only a few people had this money. But the more time passed on, the more liberalization came into the business. So I exactly know this is a privilege. Even now, after many, many years, I trade. I always know what honorable privilege trading is. And therefore, I have the biggest amount of respect of this business. But the new generation, because it did not experience all those processes of this business and developments, they don't have this respect. They don't even know what a golden real possibility and privilege there are using in and out. They consider this business as a kind of gambling, which is very sad. Back to divergences. When the price starts to fall, that means when we have a near, let's say, the price doesn't go any more higher, the market has made an all-time high or all-time low or whatever, then of course we have some indicators that help us to see not only this channel, like these dots and lines I have drawn, but we have different kinds of indicators, especially at those levels, like the red arrow, that show us exactly, all right, the price has very weak or low possibility and potential and probability to go higher. And from here, the probability and possibility that the price goes down is increasing with each candle. And then the price goes up and down and goes higher and down and making higher high, low lows on small and little or lower time frames until the market agrees, all right, we don't go higher anymore, now we go down. That means we enter then the channel or downward channel here with blue dots. Now, back to divergences. Today we have the technology, and let's see the market here. Swiss franc, for example, made new higher highs and lower lows, and I told you, okay, to buy, to sell, to go short. And we have a very simple indicator that has been creating in the early 90s, and the indicator is called RSI. You can see it here. I make it bigger. So The RSI normally follows the price. This is the RSI. That means we see when the price normally makes a new high, the RSI also makes a new high. But there are then times the price makes new high, but the RSI stops making new highs. We can, for example, see it here. Here, the price made new highs, but the RSI made also a new high. And now if we look at the next candle, at the next period, price makes a new high, but the RSI didn't make a new high, it made a lower high. So that means from here, the RSI doesn't move along with the trend or with the series of prices. The best is coming now here. The market makes again new highs. What does the RSI do? Is it going higher? No. The RSI is making again lower low. So that means the price goes that way, but the RSI from here goes this way. If the price now makes another high, the RSI, the next possible higher high, will be down. That means the price and the RSI go in different directions. This is a divergence. That means from here we know, all right, the market currently making higher highs or new all-time highs. And now we have very big traps here.